Like I want to retire early.
Putting your money investing into some investment option,
What is wealth management?
managing your wealth in a professional way.
I want to save, but I don't know where to start.
You should know all the investment options, how it impacts your wealth, then you should know the economy, then you should know the taxes.
Nowadays, we have a lot of scams in the financial market.
Certified wealth manager or certified financial planner, they will have their ID cards. Every year, they have to renew it. CE points. CE points is continuous
So,
education.
what is financial planning?
Everybody who invests should do it before investing. You are younger, so you can take more risk. Grow up, your risk appetite will come down. For example, you have a lack of rupees. You just keep investing for your retirement. Unless you know how much is the economic value of your retirement goal, you will not be in a position
Buying a house.
to get a job. First thing is you start saving. Whatever you earn, minimum 30% should go towards saving. But whenever you get your first salary, you should start with financial plan, then start your savings.
Investing in stock market and equities are too risky.
Why? Because to enter equity market, you should be expert. End of your age when you are about to retire, and if that corpus is not fulfilled, then you are in a danger zone.
Hello, wealth seekers. Welcome to Wealth Talks, your one-time financial solutions for all your wealth needs, where we are going to discuss past, present, and future of wealth management. I'm your host Yatish, and today we'll be discussing various topics on wealth management. Before diving into the episode, here's a quick brief about the series. In this series, we're going to discuss all your wealth needs, from tax saving to mutual funds, from SIP to retirement plans. We got it all. Have these thoughts ever crossed your mind? Like, I want to retire early, and I wish I had more savings. I want to save, but I don't know where to start. Well, to answer all these questions, we have our special guest with us, Mr. Yogesh Mamane, who is a certified financial planner and CFA Level 1 with over 20 years of experience in wealth management. Let's welcome him to the show. Hello, sir. Welcome to the show.
Hi Atish, how are you, sir? I'm fine here. Thank you.
Yes, sir. I'm feeling good. So, very excited to start this episode. So, yes, sir. Let's start with basics. So, can you just brief about yourself?
Yeah. Basically, I'm Yogesh Mamane. So I'm heading the wealth management team of Cautilya Capital Services Bangalore. It's basically a wealth management company. So we started in 2017. So it's almost now 8 years. So we are actually managing assets under management of roughly 150 crores on mutual fund side. And we are managing around 1,000 plus clients. Okay. So I have done CFP, I'm a certified financial planner, and I have completed my CFA level 1. So I carry overall experience of around 18 plus years. So wherein I have been managing roughly more than 1,000 plus clients. Okay. So that is about me and my company.
That's good to hear.
Thank you.
So let's move on to the next question.
Yeah.
Yes, sir. So Cautilya Wealth. So how does this company different from other companies, and why should I come to Cautilya Wealth?
See, basically, Cautilya Wealth is been started by Mr. Ashok Devanampriya.
Okay.
So he carried a vision that it shouldn't be a company which is only focused on sales. Okay. So when we sat 8 years back, so we discussed a lot of things, because in this wealth management there are a lot of competitors prevailing in the market and a lot of big brands are there. So how we are going to fight with those people? So how we will stand up in the competition? So what we decided that time was, whoever comes, okay, generally people will go run behind the sales, but that shouldn't be our agenda. So what we do here in Cautilya Capital is, once a client walks into our office, so we just take their goals. So what is their goal? Then once we know their goals, so goals can be short term, medium term, then we build up their goals.
So it's like personalized planning.
Personalized plans. So we build financial plans for them. Post we building financial plans, then we get into sales advisories. So basically once you have that financial plan in front of you, then we advise them on which funds to invest, what are different investment options. And post this, we also take care of their income tax filings. So we put ourselves as one-time financial solution for all your investment needs. So we start with financial planning, then move on to sales advisory, and finally we take care of tax filing. Why? Because why this is important is once you do sales, once the client start investing through you, so we are the right person to know what are their capital gains, what are their capital loss, how much they have saved towards ATC, ATT and all. So we are in a better position to file their income tax return, and the client need not have to run in nth hour for that income tax filing. So it's all end-to-end solutions when you walk into Cautilya Bank. That's how we differentiate.
Okay, sir, that was very intriguing. So, what is this Wealth Talks? So, what can we expect from this series?
See, basically, Wealth Talks is where we'll be focused on training people. This session should add value to people's life. So here we are going to talk right from the basics, and we will get into the advanced mode. Yes. So basics means what? As I earlier said, we will start building the financial plan. Why one has to save, and we'll build the financial plan. Then move on to sales advisory. Then moving on to tax advisory. So this, if I tell you immediately, you will not understand. So we'll start with the basics.
Yeah.
So what is the basics? So we'll take you slowly to advanced level. So once you go through our episode, you yourself will be expert, and might be you yourself will start investing on independently. So this is basically what we are going to do it in this Wealth Talks.
So, basically, be strong on your basics so you can build an empire.
Yes.
Let's dive into today's topic. So, what is wealth management exactly and who needs it?
To be very precise, wealth management is very subjective, okay? But in a simple way, I can tell you is managing your wealth in a professional way.
Okay.
Either you manage yourself or take the help of an expert.
Okay.
But I advise this, always go with the expert view, because this is a very vast subject. Okay. Here what actually is wealth is, you start investing, means saving, putting your money investing into some investment option, then growing your money. Finally, once the growth is done,
Yes.
protecting it, safeguarding it, then reaping the benefit. You yourself have to reap the benefit. Once you reap the benefit, passing it to the legacy.
So, you should be smart enough to add all this.
Yeah. So here 4 stages are involved. So a typical individual, I don't know how much expert he will be and how much knowledgeable he will be, because you should know all the investment options, how it impacts your wealth. Then you should know the economy. Then you should know the taxation. So it's a wide subject.
So, the rules change every year, or will it be the same?
See, every year, as you know, how in latest budget, so how the taxation changed, what the tax slabs have changed. So same way capital gain taxes will also change. So you have to be up to date with the knowledge of taxation, with the knowledge of economy. So it plays a very important role when you invest. So I would rather suggest, rather than going independently and managing your portfolio, I will suggest you to take a help of a expert who is professional in this field. And again, talking on professionals, basically a lot of people quote here, I am a financial planner, but that is not the case. Financial planner means actually you should be a certified financial planner.
Yes, nowadays a lot of scams are happening in
Or a certified wealth manager. So whenever you meet as an independent, for your independent investors, you should ask their ID cards. If you see certified wealth managers or certified financial one, they have their ID cards. So those are professionals and they are expert in their fields. Okay, so I think you should take help of those people.
So, how to find out that genuine person and a fake person?
See,
Nowadays, we have a lot of scams in the financial markets.
correct.
Yeah.
See, basically, as I said, any certified wealth manager or certified financial planner, they will have their ID cards. So they will have their own certificate, because every year they have to renew it. For that, they have to earn some 15 CE points. CE points is continuous education. So what financial planning board who issue this certified financial planner certificate, they ensure that the certified financial planner is up to date with the knowledge. So every month they come up with a magazine with the up-to-date market knowledge.
So they should prove themselves that they're fit
Yes.
to the market.
And they should earn. Post you reading the magazine, there is a quiz framed by FPSB India. So one should take the quiz, qualify for 80% of the marks, then
Okay.
they will give you 2 points. So this way,
Complicated.
so this way they have to get 15 CE points to keep their education, to keep their certification live. So I think you should first of all, when you meet a financial planner, whoever says I'm a financial planner, you should ask for their ID cards.
Yes.
So
It's very important.
I think your question is answered.
Yes, sir.
Yeah.
So what is financial planning and how important it is?
That's again a nice question, Yatish. See, basically financial planning, everybody who invests should do it before investing. Okay. Why this is important is financial planning is nothing but first of all, whenever you invest, you should know your goals. Okay. One invests definitely for goals. Goals can be short term, medium term, long term. Short term can be buying a house, buying a car, or buying a bike, whatever you say, or going for vacations. Okay. Medium term can be for your children's education, children's marriage, and of course long term is your retirement goal.
Yeah.
So once you know for the purpose, once you know the goal, second important point is you should know the economic value of the goal.
Yes.
So what do you mean by economic value of that goal? So assuming today you have a kid who is 2 years old, and you are planning to make him an engineer. So today for 4 years, the engineering will fetch you roughly around 20 lakhs, roughly.
Yes.
So this 20 lakhs, 16 years down the line, when your kid actually enters the UG program, will not be the same.
Yeah, obviously inflation is there.
Why? Because education inflation will come to the picture. So that 20 lakhs, considering the education inflation for 16
So
years,
just for the people who don't know what is inflation,
inflation is nothing but it is called as demand supply gap.
Okay.
Okay, that is what we say.
Noted.
But now here if you see this 20 lakhs 16 years down the line will not be same because education inflation will come into picture.
Yeah.
So today's education inflation, for example, it is around 10 to 15%. So this 20 lakhs at the rate 10% also if you take 16 years down the line, suppose becomes 1 crore. I'm saying approximate. So that is the economic value of your goal.
Yes.
So then third important point is once you know your goal, once you know the economic value of your goal, third important point is you should know your risk appetite.
Okay.
So generally we say in investment, we follow investment thumb rule where we say 100 minus your age is what you should take risk.
Sorry, sir.
100 minus your age is what you
For
should
example,
take.
consider my age is 25.
25. So 100 minus 25 is 75.
75.
So according to me, your risk appetite is 75%. So what do you mean by that? Now, your
So will it be reducing as I grow up or?
yes,
Okay.
it will come down because
Okay.
you are younger, so you can take more risk.
Okay.
Okay, as you grow up, your risk appetite will come down. So that is what it means, risk appetite. Okay, so we follow generally. So 100 minus 25 is 75. Now your economic value of your goal was suppose 1 crore. You have to accumulate 1 crore 16 years down the line for your child's education. Now out of that 1 crore, 75%, which is 75 lakhs, you can accumulate taking risk.
Okay.
Investing in a different riskier
Riskier options.
Yeah. For example, your derivatives, for example, your direct equities, you can say stocks, for example, mutual funds. All those comes under riskier instruments.
Yeah.
And another 20%, 25% should be safe and secure and to beat the inflation post your tax. That is what is called as knowing your risk appetite. So first know your goals. Second is know the economic value of your goal. Third is know your risk appetite. Once you know these three, then you are actually in a position to start investing because we will tell you your risk appetite.
Yes.
And you will know where to invest at what percentage rate.
Where to start and how much risk can I take and
So
things like that.
once this is done, you have your goal in front of you. You know how much you have to accumulate towards your goal. You also know your risk appetite. So now you are in a better position to start investing.
Yes.
So I must say, everyone and everybody, before investing, get your financial plan done. Then you are in a position to invest, because lot of the time what happens is 99% of the people, for example you have a lack of rupees. Okay, you just keep investing for your retirement.
Okay.
How much confident you are that a lakh of rupees per month will suffice your retirement goal?
That depends on the inflation and many.
Unless you know how much is the economic value of your retirement goal,
Yeah.
you will not be in a position to know how much I have to invest.
Yes.
Okay, so end of your age when you are about to retire, and if that corpus is not fulfilled, then you are in a danger zone.
So what is the right age to start financial planning?
Are you in a position to contribute that much time?
Investing in stock market and equities are too risky.
Share you the winning stories.